All right, everyone, welcome back for another episode of This Week in Charts via Carnival Trades and Wall Street from Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivaltrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week here. So, markets, I'm doing this video actually on Monday here. It was at a busy weekend with the hurricane here down in the, I'm in the Florida area, and definitely helping out clean up and so on and so forth. I'm okay, in case anybody was wondering, but definitely a hectic weekend here. So, getting the video out on Monday here. But in any case, markets today on the weaker side. Last week, we were kind of just in a range. You can see here, I've got these shorter term kind of trend lines drawn in here. And we did kind of break outside of this range. And one of the things I did on Friday, my Friday video, I talked about kind of momentum declining here. And I think that on this particular rally that we've had a really strong September, which really bucked the trend, right? So, I was in the camp that back half, last week and a half or so of September would be a little bit potentially on the weaker side. But that was not really the case. We kind of just floated up here into the end of the month, although we have backed off the last couple of days. I do think the market is starting to weaken, though, as we get into October. That doesn't mean we're necessarily going to have a huge downdraft or anything like that, but I do see momentum declining based on some of my indicators and my proprietary techniques. You can also take a look at, for instance, even just it's not something I use a ton, but a stochastic here. You can see that's starting to turn negative the last couple of times we've had that happen. It has led to some sort of dip or decline here. And we are going into October. Seasonally, again, is weak, although we have bucked the trend in seasonal weakness for the most part in September. So the market has held up really well. A lot of that having to do with some end of quarter stuff going on. There's a really horribly kept secret with JPM's collar trade, a short call at 57.50, and that's kind of keeping us pinned for the most part to inside of this range. That will roll off after today, though, and there will be some end of quarter stuff going on at the end of the day, but overall that will invite volatility into the market a little bit. That means the market can be a little bit less pinned and can trade a little bit freely. So at this point, I think that we're most likely going to see some type of a dip or decline here. Right now, 5,700 is a big level on SPX, and then really 56.75, right? That was essentially the previous all-time high, 56.70 to 75. That was the previous all-time high, and then we have this level right below it, 56.50. So those areas, as long as we're above that, I mean, the market's technically safe. But if we were to lose that, especially on a weekly close, if we were to close the week below that pivot, I would expect some more downside here as we get into the October timeframe. But market's still holding up well right now. Powell was out today. We had some volatility. He mentioned essentially kind of reinforcing the dot plot that 25 basis points was more likely by the end of the year. The market had already started pricing in 50. Again, the market loves pricing in these really dovish, aggressive rate cuts, but so far that's not been the case. And you can actually see here, if we flip over, we'll talk about it in a minute, but you can see the 2-year yield starting to get a bid in the afternoon here. So again, bond market mispricing things. What else is new? But either way, markets held up last week. And again, I'm seeing a little bit of signs of momentum declining. I would just advise some caution, maybe a good area to harvest gains if you have them at this current time here. Markets are holding up. But the big story really last week was, and we will talk about it here, is China, right? Looking at the FXI here, was down 1%, a little bit of a gap and crap here. But and by the way, this is something that we had at Carnivore Trades. We had this at 25.60. We also had ASHR, which is another ETF for China. And we had this at about 23.50. I think 23.48 was our average entry. And I figured China was going to do stimulus. That was a reason for this trade. Also, lots of fear out there. But, I would be lying if I thought we were going to, pump this much. But nonetheless, it was a great trade for us. And look at this weekly candle on the ASHR. That's essentially the Shanghai. I mean, the FXI here kind of covered. It's just basically similar to the Hong Kong. Now all the way up into the weekly 200 MA. Just amazing moves there. We can actually look at there's the Shanghai there. Look at this run here over the last 2 weeks. I mean, that's like a 20% gain here in very short period of time. There's the HK50, the Hong Kong. And you can see that essentially resembles the FXI right into that weekly 200. So with this may back off a little bit here. You can take a look. The HSI's trigger the strongest breadth advance in history. It's usually a bull market indicator. Now we are very overbought. It is very overbought, so I would not chase up here. At least wait for pullback or dip or something like that. But they're doing serious stimulus here. And this is, I think, a little bit beyond a short squeeze. So China really in the news right now, and for good reason. I showed this last week as well, but they're big in buying gold here. And you can see Chinese gold trading activity has exploded lately. Gold continuing to make new highs last week, although it is off the highs now, finally. Maybe getting ready for a pullback. I told you guys 26.90 last week. We did pierce it by a little bit, 28.708. It's just a general guideline. It is finally backing off, but still in very strong, it's in very strong shape here. You can see the GDX backing off a little bit more. We'll talk about that later, but China is the big story here this weekend. Even the I was going to say that if we flip back over here, you can see the Nikkei kind of going in the opposite direction today, or I should say last Friday. But and the S&P kind of just hanging in there and pinned. But Chinese markets really ripping higher here. American markets think they were a little stretched here in the short term, or not so much stretched, but kind of looking for maybe some type of a rollover, some type of dip here as we get into October. And QQQ back below that 46 handle. So that was the level, if we look at like an hourly time frame, that was that previous high from the Fed. And then we kind of just chopped through it, and we're back below it now. And we're going to close below it for the first time since trying to break back above it. So again, a little bit of weakness here coming into the markets. Again, I'm not saying it's going to be a huge decline or we're going to have this big meltdown, but I think this is probably an area for at least harvesting some short-term gains here. At least from what I can see, it could easily be wrong. But again, that's just what the charts are telling me right now. All right, IWM here down 71 cents today. And again, lower highs here on the daily, but it's hanging in there. If we draw our trend lines back on, you can see, I think I lost my trend lines. There we go. So, all right. So we did tip below that trend line earlier last week, and we got back above. Again, just kind of breaking out of this wedge and still kind of grinding in this area. Still got some support around 215 and then 210, as well as this lower trend line if we were to dip a little bit more. But IWM hanging in there last week. The Dow also made a new all-time closing high on Friday, though it did come back in, and it printed a little bit of a tail candle. So a little uptick in volume there as well. That can be a topping signal. So just be aware of that. It tried to break out and it pulled back in, and now it's going to close below yesterday's low. So definitely a little bit of weakness again. Momentum sort of declining here from what I can see, and market's starting to soften up as we get into time for seasonal weakness as well. SMH here down 2% today. Again, little hanging man candle, and you can see the same thing on the spiders here, right? Hanging man, let me clean it up. There you go. Hanging man candle from Thursday, and then kind of follow through to the downside today. And same thing on the SMH there. So tried to break back above that pivot. It held for one day and it couldn't hold it. So SMH a little bit weaker here. We'll see if 230 or so becomes support again. The 200 moving average is right below that, which coincides with this trend line perfectly. So we can extend that out. So that would be an area of interest if we were to pull back. So we'll keep an eye on that. IGV, cloud software, still one of my favorite sectors, still very strong. I don't like the island look though. So we have the big gap and we're just sitting up here. A lot of the time these can get a gap down and go the other way. But right now it's still a strong sector. Oracle's still holding the gains really well so far. What a monster move that has had, and that's a big cloud stock. Down transport's holding up very well. So again, I told you guys about that big sell last week, and I said, don't count it out yet. And look what it did. It came all the way back, and it's actually green today too in a down tape. So transport's still holding up. We've been hammering on this 16.2 area for almost a year. And again, we got a big ascending triangle here. So transport's still pretty strong, despite all the recession talk. So DJT hanging in there. And they're holding up for the most part. Rates, so again, 2-year, starting to turn back up a little bit. You can see the yield curve starting to come back down. This is a weekly. Let me flip over. There's the data. So the yield curve starting to flatten a little bit. 2 starting to inch back up. It's pricing in a little bit less of a dovish Fed. It's 5s, 10s, and 30s. Still pretty firm. Like, you can make a case it's kind of an immature kind of bull flag here on the 30s and 10s. I think these are going higher. So I still think that TLT trade, that the long bond trade is a little crowded here in the short term. I'm still expecting another leg up here in yields. But for right now, I'm just kind of basing. If we can get through this 50 moving average, I think they start to push. And you see that 10-year up towards 4%. Right now, growth is kind of the market doesn't mind yields going up a little bit because it's a sign of growth, which means, we're closer to a soft landing rather than a hard landing, right? But if they go up too fast, I think the concern could be, wait a second, is the Fed cutting into growth here? And you got stimulus from China as well. Could that be a concern that inflation comes back? So just something to chew on there. It doesn't mean it has to happen, but something to think about. XHB down 0.5% on the day, but still in a tight range, and this is still pretty strong here, above all the moving averages, and it's just consolidating. So again, home builder is still very strong, very tough sector to short. VNQ finally backed off of the 618. We talked about that a week or two ago, into the weekly 618 from the all-time high. I think it was an all-time. Yeah, there's an all-time high to the 2022 lows, and it is backing off. So we'll see. That probably wants to go down to test 94 to 93.75, but good retreat there. XLF still holding up really well. So it does have a possible M top, so you can see the M shape there. But if you take this high out, there's really nothing to say. It just can't keep going up. I'd like to see it come back down to about 44 with a lower high to look for this thing to back off a little bit more, but it's still pretty strong. Take a look at JPM. I've been talking to you about how weak this is, but it gapped down today and it's climbed all the way back almost to flat. So that's not a terrible look there for JPM. Banks are, they're trying to hang in there. KRE is green on the day. KBE is green on the day. These are both in a down tape. So green in a down tape, nothing terrible there. And then broker dealers here are down, but again, still on a very strong uptrend. Oil finally backed off last week. There was talks about ceasefire and stuff like that. It is what it is. I think it's an election year, and we're almost to the election, so I don't see a ton of downside left for oil, to be completely honest. If the lows aren't in already, I think they will be in within the next month. So I'm watching this. I'm watching for pattern here. There is room for higher lows. We may have one right here. Oil up 12 cents today on the futures. COMEX is red, but nothing terrible yet. XLE is green, so up 0.25% here. Again, possible higher low. We'll be watching that. XOP again. OIH, same thing. Possible higher lows. We'll be watching these for pattern. I think these will be longs into the end of the year, possibly even into Q1. CCJ really continuing. What a beautiful W bottom. We talked about this. Bam, gap and go, and it just took off. So into a lot of resistance though. So we can just draw this in right now. I mean, you can see that's where we broke down. I can type that in right. There we go. So that was our last pivot before the breakdown. And that's where we're stalling out right now. But what a recovery for CCJ and uranium. URNM backing off of this breakdown level, and then URNJ, same thing. But still very nice recovery for both of those. Nat gas rolling over to X contract, that is still very strong. At least in the short term here. Again, possible little W pattern. I think this has one more leg up into November, and then I think that's it for the year. But I can see this above, I'm pretty certain this will be above 3 at some point. Dollar index just does not want to go down. Look at all this selling pressure, and it just can't break it down. So that's another reason why I think yields are going to get some type of a counter trend pop here. Is that the dollar starts to break up, that should be bullish yields. 102, 102.50 here in the short run, I think is doable. It's just waiting for a catalyst. We have jobs data this week. We got JOLTS tomorrow. By the way, guys, this is the last jobs report before the election, if I'm not mistaken. Unless we get okay, I believe we have one. We should have one more, but. Okay, and maybe we have 2 more, right? So do you think they're going to report a huge drop in jobs this week? I would be a little shocked. I mean, I'm just going off, maybe I'm wrong, but just going off the incumbent schedule here, I think they're going to find a way to make sure the jobs look good. Just a guess. Great. Gold down 70 basis points today. It is off the highs. We'll see. Again, maybe yields pop and that brings gold in. You know, it's due for a pullback, I'm sure. It's had a nice run. But lately it's been ignoring yields and it's been ignoring the dollar. So gold just, it's behaving like it should in a bull market, which is the news doesn't matter. Just every dip is bought. That's what bull market behavior is. And it's doing that, although it is finally coming back in. Today we finally got, 2 down days in a row for the first time in a minute. Well, I guess we had a couple of them here and there. But this looks like we're actually going to close at the lows of the day, though, as opposed to all the rest. But, yeah, we can see, it could easily just back into the 20 MA and then make another high. So gold's still holding up really well. GDX just off the highs here. That trend is still up there. Same thing with GDXJ, GoAU. These are fine. A little overbought, but they're fine. Silver here backing off 1.5%, still inside of the green. And that is just below multi-year highs. So weekly chart is very good. Monthly chart is very good as well. I love this pattern on the monthly chart of silver. Platinum backing off as well. And so is palladium. I think these are getting very attractive again. Played them not that long ago, and I'm looking to get back in. Copper here, that's a contract roll, so that's why there's volatility is so high. But it had a very nice recovery. Got all the way up to 480 and then pulled back. Again, that's, there's something to be said. Maybe the Fed is cutting into growth here if copper is doing this. China obviously having that stimulus probably having an effect here. But yeah, we'll see. We'll see how it plays out here. But copper acting well. Bitcoin also had a good week last week, although it is coming back in today. I talked about this. I said, this is getting close here, but we could see one more dip. And I think if we do, I think that's when you want to buy. I think Bitcoin gets going by the end of the month here. But we'll see how it does. It is backing off. It did finally get above 63.5 to 65. And now it's just kind of pulling back in right now. I still really like the weekly pattern on this, though. This is acting very well. So again, we'll see what we get. We got jobs this week. Market's holding up okay. I think momentum's declining, though, and I think we'll probably see some type of a pullback more sooner rather than later. That doesn't mean that we're going to have a huge meltdown or anything, but I think markets are a little tired here from this really massive bull run that we've had in the month of September. So anyways, guys, going to wrap it up here. Again, don't forget to come find Jason on Patreon. Come find me on carnivoretrades.com, and I'll see you guys all next week.